Have you ever seen a real estate agent post one of those little squares that say X many houses have been sold this month and there's X amount of dollar sales and blah, 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 blah. And it's this little square of information and you're kind of like, so? Yeah, me too. And it drives me nuts. So my market update, which I'm going to do today for you, I'm going to go through how I read the data and show you exactly what I look like and exactly how I interpret the data to give you the best idea of what is going on in today's real estate market. Hi, I'm Allesen Cann. I'm a real estate agent here in beautiful San Diego, California, and I am a data nerd. So I love diving into the data to understand exactly what's going on in the real estate market. There are so many scary headlines out there right now. The market's going to crash. Prices are down, prices are up. Like, what the heck is going on? So when I see that stuff, I just go straight into the data and I want the data to tell me what's actually happening. So today I am going to show you the exact data that I look at and how I look at it so that you can understand why I say the things I say. And if you have any questions at all, please don't hesitate to put them below. I would love to address them because stuff can be confusing. So let me know. Before we get started, please subscribe to my channel and click the little bell so that you get notified whenever I put out new content. If this video gives you any value at all, please give it a thumbs up. And again, comment, let me know what you like, let me know what you don't like. Let me know if there's other information that would be helpful for you to see. And then let's get started. All right, let's dive into the data. So we have this system called InfoSparks, and it has all kinds of information in it. And I absolutely love coming in here and diving into all of the details. So I'm just going to take you along so that you can see what I look at when I am looking at this information. So it always opens to median sales price. And I already went ahead and put in San Diego County here. It actually pulls for like the entire MLS region or whatever. So it pulls in other counties as well, but I want to focus specifically on San Diego County. And you can see I like median price because this is the most common prices rather than the average of all the prices. And that can swing more because if a $100 million house sells one day in Rancho Santa Fe, that's going to completely change things. Whereas the median stays a little more steady and is a little more accurate as to like what's actually happening in the market. So I like to look at median, and you can see we have a 5-year history here, but let me move me out of the way and we will go to the max. So the max goes out to 2008. And you can see the market was still going down during the Great Recession during this time, and it pretty much bottoms out here, I think in 2010. Yeah, it bottomed out in 2010. And has basically been going up ever since then. So you can see it's been a fairly steady climb until, of course, May of 2020, when things just skyrocketed because interest rates had dropped to insanely low levels and demand took off and everyone needed to move into bigger houses and all of that. So things went crazy. This year, things spiked in May of 2022. So if you were looking for a house earlier this year, things had gotten like kind of legit crazy. It wasn't fun. It sucked. And then in May is when the interest rates completely changed. They went up by like a point in a week and everything dropped off. So we had from May, we had June prices went down, July prices went down, and August prices went down. But here's the thing. There are a lot of people who saw this and we're like, oh my God, there's some deals to be had. So in the past month, we've seen prices tick up again. So this drop here, I believe, was about a 9.2% drop. So we're up a little bit. So we're probably like down, 7 to 8% still. But you can also see that in previous years, prices have gone down toward the end of the year also. So this isn't unprecedented. Like, this happens pretty much every year. In fact, let me go to 5 years, because in 2018, there was actually a pretty significant drop between the high that year, which was here at 570, and then it went down to 540 by the end of the year. And this is just kind of what happens at the end of the year, is we always see prices go down. So this year it started a little earlier because of interest rates, but some of it's normal, some of it was going to happen regardless, and some of it was exacerbated by the interest rate. So I'll be curious to see what happens in spring, because you can see that in like pretty much every year things start going up. You can see here May, it starts going up till the end of the year. That was 2020. Of course, that one was kooky, but you can see January's the low, and then it just keeps going up. It usually spikes in the summer and then starts going back down. So same 2017, it was the low in January, goes up, spikes in June, and then kind of dwindles back down until January. Again, spikes. And this is just what happens every single year. So the reality is if you want to get a deal just in general, it's better to buy towards the end of the year. And that's really the only way to time the market, because you can see now people are probably starting to hear, hey, prices are down, but they're already on their way back up, because now everyone's hearing the prices are down. So they're like, well, I should get in now. And now prices are going back up. So I'm always curious. Every time I look at these, I'm like, oh, what's going to happen next month? I'll be curious. Is this going to stay on an upward trend? My guess is it's probably going to stay more like level. Maybe it stays the same. Maybe it goes up a tiny bit or goes down a tiny bit. But I think we're going to kind of level off through the end of the year, just because interest rates are not calming down at all. But that's kind of what I look at. I look to see, like, is this a huge aberration from the norm? Kind of where are we? And you can see here, we are still up 6.7% from last year. So if you hear statistics that say, oh, we're up in prices, technically we are. So you can see September of 2022 is at $800,000 median price. And if you go to September 2021, we were at $750,000. So prices are up countywide, but they are down from the high earlier this year. And so if you've been waiting for the market to go down, it has. This is what it's done. There are predictions out there about it completely crashing and whatever. I'm going to show you more about why the data is still saying that's not likely. All right. So after I've looked at price, and I find that very interesting, and I can dig into, like, is there a difference between the attached market, which is townhouses and condos, and you can see that it has continued to go down. So if you are looking in that space, that could be helpful. The detached market is where the little bump up has gone, because people were smart and said, hey, it spiked, it's gone back down, let me get into that market. So my next thing that I like to look at is, why did prices go down? We know interest rates are there, but is there anything else? Like, did a ton of new listings come on the market? No, they really didn't. So look, we have been going down in inventory consistently for the last 4 years. But we really don't have extra inventory, but it might seem like it, right? You look at the market, if you're looking at houses, and you'll be like, there's so many more houses on the market, there's so many more options, and that's 100% true. But it's not because there are more houses. It's because houses are sitting on the market longer. So let's look at this. Over the past couple of years, you can see 7 days on the market, 7, 8, 8, 8. This is how long the average house sat on the market. And I can tell you from experience that 7 days was the weekend is really when it was on the market. They had 20 offers on Monday. It took them a couple of days to negotiate things out and then get it into escrow. So really it was on the market for 3 or 4 days. And then there were a couple extra days to go through the offers and everything. But you can see April is when things drastically changed. As soon as interest rates went up, we started seeing this rise. We're now at an average of 18 days. So things are just sitting longer. It's not that there's more of them. It's just that they stick around longer. So you have more options because they've been around for a longer time. But you can see we are still drastically down from 2017. If you look at median, It's like really high. And in fact, if you go back to the max, over 3 months to sell a house back in 2008. And now we're at 18 days. So, and people are like, oh my God, like sellers are freaking out because it's taking more than a weekend to sell. Like, this is still really fast. And, you know, you look at that and it's like, all right, well, so things are selling really fast. We don't have very much inventory, but prices are going down. Like, what's going on? Does this mean we're in a buyer's market? Well, let's go look at months of supply. So months of supply is if you take all the houses on the market right now, how long would it take with current demand? So basically like as many homes as sold last month, if that stayed steady and we look at the number of houses on the market right now, how long would it take for all of them to sell? And you can see right now that is 2 months. And in fact, it's like 1.7 months if you get into like the absolute details of it. A stable market is 4 to 6 months and a buyer's market is above 6 months. So we're still technically in a seller's market, and that's after like demand has dropped off drastically. We're still only at less than 2 months of inventory, and demand has dropped off. Like pending sales are down 40%. So demand basically has dropped off 40%, and yet we've only gone up to 2 months of inventory from less than 1 month of inventory. That just shows that we just don't have enough houses. There just aren't enough houses on the market to sell. And look at active listings again. It's not improving. It's been going down. And I can tell you right now, people aren't going to sell just for the fun of selling. Like, because almost everybody has like a 2 to 3% interest rate right now. So if they buy right now, they won't have that anymore. So they're going to stay put unless they need extra space or they need to move for a job or they are getting a divorce or like whatever the situation is that's a need. I need the money. I need to sell. I need to get that money. Otherwise, they're probably just going to stay put because they got a really great interest rate. Why would I sell? So don't expect a lot more houses to come on the market. It's just probably not going to happen. And the people who have like investment properties, rents have gone up like crazy. So they're just making money hand over fist on that. I just don't see a lot of places where, excuse the cattail, I just don't see a lot of places where we're going to see like what's going to drive people to sell, because the high prices haven't. I mean, you can see that the prices have been crazy high and yet inventory has been dropping. So I talk to people every day who are like, I'm going to wait for a better market. I don't think this market's a good market to buy in. I'm going to wait, whatever. The question I have and my concern is, what does a better market look like? Because right now, if we look at sales price, it's down, right? Like this is the biggest drop we've seen since the Great Recession. We know that there are very likely not going to be a ton more houses coming on the market. People are not going to get foreclosed on because they have a ton of equity. So even if they lose their job and they can't pay their mortgage, they will just sell the house and they'll take their equity and they'll go live off that. This is not like 2008 where people had mortgages that they just could not pay and then they had no equity. So they got foreclosed on or had to do a short sale because they couldn't sell it and make money. In fact, they would sell it and lose money. So they just walked away. We're not in that market. So I don't see more inventory coming on the market. Prices are down. Prices are down because interest rates are up. So, you know, people didn't want to buy through this period because prices were going up so fast. And I get it. Like that's a scary place to be because you're like, am I overpaying? Like how much is it going to be tomorrow? Like I'm in a bidding war with 20 people and now I have to go $100,000, $200,000 over list price. This seems ridiculous. Totally get it. That wasn't a fun market to be in. It sucked. But those people who got in the market, and even if they bought at this very tippy top, they got in the market with a 3% interest rate.
So that house that they bought at the very tippy top of the market still likely is going to cost them less than if you buy at a higher interest rate. Because every 1% that an interest rate goes up, that's like the price of the house going up by 10%. 10. Okay. So if prices have dropped less than 10%, but interest rates have gone up 2 to 3%, these guys who bought at the top of the market are still in a better position. Okay. Now you can wait. You can wait. I don't know that prices are going to come down a lot more. My expectation is they're going to flatten out for the rest of the year. Spring's going to come. They're going to bump back up, closer to this level again. But interest rates are going to be higher. They're going to be 7-8%. Okay, let's wait until interest rates come back down. If they make that big of a difference, Allesen, then I'm just going to wait. I get that. I totally do. Did you see what happened when, as soon as people realized that prices had gone down, they started going back up? That's the same thing that's going to happen as soon as interest rates drop, like the second they drop. Soon as we see interest rates back in the 5s, which is probably what you're waiting for, the demand, all this demand that we saw go away, going to come right back. Because everyone's going to be like, oh my God, now's the time to buy. Interest rates are low. But by the time you figure that out, prices are already going to be up. This is why you can't time the market. It's not a possibility. So the key is get in the market and wait. If you get in the market and you just hold on to it, then you get to see this line. Things go up. I wish I could show you, if you look back from 1940 or 60 or whenever it starts, it's just an upward line the whole way. There's a dip in 2008, and then it just keeps going up because that's what real estate does. So if you get in the market and wait, instead of waiting to get in the market, you're going to win. Now, if you're only going to own the house for, 2 or 3 years, maybe you don't buy. But if you can buy it, and even if you only live in it for 2 or 3 years and then you can rent it out, it's still probably a good decision. So anyway, that is my 2 cents. That's my little horse. I'm going to get off of it now, but this is how I look at the market. I don't see a market crash. I don't. I could be wrong. Something crazy could happen, but the data is telling me that we've had our correction. I don't know, maybe we have a little bit more if interest rates go up to like 9%. But for the most part, all the people who were like, oh, I had like a 4 or 5% rate, they're out of the market now. They either already bought or they're out of the market. And we have a whole new set of people coming in who are like, this is the rate. I want to buy a house. I can afford to buy a house. This is just what I'm going to do. And I'll refinance in a couple of years when the rates go down, because they will. So I hope this was helpful. Let me know what questions you have. Let me know if there's data that I didn't cover that you have questions about, like you've seen before and you would like to hear more about. I also have this information for every zip code. So if you have a specific zip code and you'd like to see a more granular level of detail for where you live, I'd be more than happy to send that to you. So just shoot me an email with your zip code and ask for the market report, and I will send that over to you.
Thanks so much for watching my video. I hope this was helpful. Again, please subscribe to my channel, click the little bell so you get notified, and comment below and let me know what you found interesting, what was confusing, how I can help more in the future. And then check out my next video.